Hey everyone, back to Monica Pai. Aiman here. Okay, so looking at the S&P 500, well, it traded almost flat or sideways on Wednesday's session as investors were left, I would say, flying blind at the moment due to the government shutdown. So the market, I think, was stuck in a holding pattern, balancing hawkish comment from the Fed official against optimism that the House vote to reopen the government is near this week, potentially this week, right? So I think at this juncture, traders are heavily relying on the private data and the headline risk as well, causing the volume to dry up. However, if you see charts right here, the uptrend market structure, well, remains intact, remains strong, right? With the higher high uh, uh, pattern still remains. Okay. So yeah, looking at our US trading stocks that we have published yesterday. So we got RTX Corp, which is stock code RTX. So the stock is on its pending breakout formation, eyeing for the $180 level. Now we can expect that the level to break and to travel towards the $190 level on a strong momentum, followed by the next resistance at $200 level. Now, if they counter reverse or the stock to reverse, do watch out for the support of $170 dollar support, as it could indicate an initial uh, uh, reversal. Right. Also, we have Snap right here. Okay, so if you look at the chart here, right, the counter is on its high, I would say high market structure following this gap over this 21-day SMA line, and it rebounded, right? Which also eyeing to reach the towards the $9 level. And if they stop to climb up higher, we could see that it might travel towards this uh, dollar level, followed by $11 level. Now, if the stock slide lower below the $8 support, this could spark a shift into a bearish structure. Right, moving on to the other market, which is the China market. Well, the China A50 index, I think, consolidated on yesterday's session as the market digested the uh, underwhelming result from the shopping festival, right? Which also shows us that while the consumption is recovering, well, it remains rational and value driven. So I think this makes consumer data cause a pause in the recent rally, right? Of the consumer staples and the liquor stocks. Well, I think financial provided some stability. So investors are now adopting a defensive mood, right? Waiting for the release of the key monthly data, which I think later this week. Uh, yeah, later this week. Right. So moving on to our the WTI crude oil price futures. Well, it plunged I think over 4% on Wednesday, right? Breaking below this $60 level after I think the OPEC MOMR revealed a drastic bearish pivot. Well, it finally acknowledging a global supply glut in the third quarter also, right? And I think the OPEC revised its outlook to show that the market will be oversupply or balance in this 2026, abandoning its previous prediction. Well, technically, this sends the price lower to test the $57 level, which I mean, well within our expectation. So yeah, still holding a bearish bias remains intact at this juncture for WTI futures. Right, so moving on to our local market, the FKLI. Right. So, yeah, the FKLI treated yesterday, I think, due to profit-taking activities in the tech as well as the plantation sector, which offset the buying interest in the consumer stocks. I think the market is currently witnessing a healthy sector rotation, right? While the broader index, I think, uh, I would say retreated, but those some would call it as a smart money is moving into uh, domestic focus consumer like those Fana and Nestle and stuff, right? Um, that benefited from the stronger ringgit. So yeah, I think we should take a look and to find opportunities in some of these defensive consumer names, right? As they offer stability while the export-oriented tech and also the plantation sector undergo short-term correction. Right. So yeah, as I mentioned earlier, the broader market is now turning into a rotational play, while the investors are now eyeing for some opportunities in November month, experiencing. I mean, yeah, for November, and they are expecting for a better December month um if you join um Joseph webinar yesterday, right? uh, so I think to me, if you look at these boxes right here, I think some sectors may attract your attention. Maybe we got consumer right here, and also some manufacturing and industrial services names. Right. So from yesterday's move, I think in terms of day-to-day performance, well, it seems a bit down following the recent rally. I think if you refer to the FKI chart, once again, it is deemed as a healthy pullback as a whole, right? Okay, so well, yeah, we still in terms of our watch list, we still look at the some of the telco names. If you guys are wondering, maybe but for today, can sneak peek into uh, some of the consumer names that is highlighted here also. So okay. So I think, yeah, maybe for those of you guys been following, right, the TMK, right? I think congrats. I think we've secured at least 6-7% already yesterday. So yeah, any bonus stocks for today? Yes, I have two bonus stocks for you guys today to look into, right? First, we have 99 Speed Mart, right? Now since I've been mentioning about the consumer related stocks just now, right? I think yeah, a few days back also we have published the 99 Speed Mart. Well, I think the reason was, if you see here, it is now heavily resting at the golden ratio of Fibonacci, and it appears with a bullish candlestick, which giving us a confidence that uptrend remains intact. Also, yesterday we saw that there's buy interest emerge, showing that uh, from the longer lower um, shadow right here, right? Yep, we're still eyeing for the 330 cent level, followed by 340 cent level. So also, if you can check later, it's actually there's a cup and handle pattern, which is a continuation pattern happen if you make the chart a bit smaller, right? Yeah, I think maybe in terms of warrants, maybe you can stay tuned and listen to Vanessa later. So next, we got I mean the second bonus stock we got today is Kopi, right? So technically, the stock haven't shown any signs yet. However, I would like to highlight that maybe you can put this in your watch list as well to see if there's any bullish attempt to the golden ratio right here, right? You may screenshot this to look at the blue box for potential reversal pattern to happen together with some of the other confluence as well. So yeah, wait for the RSI to cross as well. And I'll keep you guys updated on this. Right. So moving on to our Malaysia trading stock. So today we have Guangzhou or GCB. Right, so the stock has breakout above RM1 level on a strong volume. So with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at RM1.07, followed by RM1.14 level. So if the stock to clear below the 93 cent support, this could uh, deepen our bullish view. Also, we have Dayang Enterprise. So the stock experiencing a pending breakout at the warring at 60 cent level. So if the stock remain bullish, we are expecting for the price to reach this warring at 70 cent, followed by warring at 80 cent level. So keep an eye at warring at 48 cent level for any attempt of reversal. And lastly, we got FCPO. Well, it retreated again yesterday as the ringgit strengthening, dampening the export competitiveness, right? Prompting from the profit taking on the recently, right? So the market remains weighed down by the heavy fundamental outlook with prices, I think, tracking the rival oils as well. And also, traders, I think, yeah, traders are also cautious as they are continue to price in the massive supply overhang, right? So now if you look into the technical perspective, the commodity is now inching closer towards the 40-50 ringgit level, which is our targeted support level, followed by this 4,000 level, since the commodity now trading both below those moving average, right? So yeah, I think stop here and pass the floor to Nabil. Thanks and happy trading.
Thank you very much, Aiman. Hello, everyone. Good morning. Thanks for joining us. From my end, I have a Alliance Bank company update report. This is the first report in about 8 months or so. So we are resuming coverage on Alliance Bank. The stock has been restricted for us for about 8 months during its rights issue exercise. But I think post rights issue, the group is on stronger footing to continue growing loans at above industry. If you recall, its long-term target is about 8 to 10%. And I think at this point in time, it is firmly on track to meeting that target. Key drivers for growth will be broad-based across all customer segments, but Alliance Bank flagged that it does not expect, or rather it is not keen to exceed the 10% upper threshold, as it is mindful that customers may be facing operational and cash flow challenges from global macro headwinds, as that sort of thing. Aside from loans growth, we think the stronger capital position should also be supportive of sustained dividend payouts. The guidance from management is for 40 to 50%. But if you recall, the past few payouts has been at the lower end of that range. And I think that should be the trend moving forward as management continues to prioritize growth and also market share expansion. Other medium-term targets include cost-to-income ratio of 45%, as well as an ROE of 11% by FY27. Unfortunately, we think that both of these targets are at risk of being revised downwards or being missed entirely. And this is really due to elevated IT establishment and staff costs on the cost side, as well as a larger equity base that will dilute the ROE. In the near term, we see the OPR cut weighing in on net interest margins and also earnings for Alliance Bank in the next few quarters. Management is guiding for NIM to compress by about 5 to 11 basis points year on year in FY26, which we think looks reasonable, especially when considering that it has recently issued some additional Tier 1 securities on top of medium-term notes to shore up funding and capital. But I think the guidance for NIM compression is also consistent with management's conviction that it is comfortable with taking a margin hit so long as net interest income continues to grow. So, basically what management is trying to say is that it requires volume growth to outpace the the margin compression, and that will give you your net interest income growth. There are some mitigating factors for the OPR cut though. Number one, management is operating with a loans to funds ratio that is currently at suboptimal levels, which leaves room for Alliance Bank to let go of higher cost wholesale deposits. And number two, Alliance Bank had recently cut its deposit rates by about 10 basis points prior to the July OPR cut. And we think this should help to accelerate the repricing impact, the repricing timing. And then this should help mitigate some of the NIM pressure in the near term. In terms of earnings forecast, we are looking at a 3-year earnings CAGR of 5%. This really coming from total operating income growth of about 7%, alongside slight positive jaws and also stable credit costs. With a 40% payout ratio assumed, the yields that we get are about 4 to 5%, which isn't exactly the best. In fact, it's on the lower end of the industry. For ROE, if you exclude the rights issue effect, the ROE would have been probably around high 9% to low 10%. But with the rights issue, this number gets diluted to low 9%, which is well short of its 11% FY27 target. But I think if you have been monitoring the share price performance year to date or post the rights issue, it does seem like the current share price has already priced in this expectation of lower ROE alongside any other potential negative news flow for Alliance Bank. And so at this point in time, we think a neutral call for Alliance Bank is appropriate. We have a target price of 480 cents, which is based on the Gordon growth model. The fair price to book is about 0.8 times in our opinion. And again, this is our first report after about 8-9 months or so. The previous call was a buy with a 590 target price. So effectively, this is a downgrade for Alliance Bank. So yeah, that's all from me. Again, neutral on Alliance Bank with a 480 target price. So that's that. Let me stop here and pass the floor to Vanessa. Thanks, everyone. Have a good day.
Thank you, Nabil. Hi, morning, everyone. I'm Vanessa from the Warrants team. So I'll be sharing on the new warrants that we have listed yesterday. But before that, I would like to definitely highlight on Nadia Speedmart. Thank you so much. Aiman was just mentioning about it. All right, so Nadia Speedmart, we actually have 3 core warrants on over this popular counter. Nadia Smart C23, C15 and C5. So from the names that you know that the latest would be Nadia Smart C23, which we just listed yesterday. All right, so with this, I actually made this comparison among all these 3 core warrants. All right, so C23, which is the latest Nadia Speedmart, right, has recorded a trading volume of about 14 million units traded yesterday. All right, by the retail investors, while Speedmart C15 was about 6 million and AC5 was about 6.8 million. Yeah, so from this we can actually tell that some of the retail investors they actually have interest in investing in core warrants over 99 Speedmart. All right, so it's not, I would say it's not a very it's not a surprise because 99 Speedmart has always been a very popular underlying stock. All right, so how do we actually choose a right core warrants for yourself if you are bullish on 99 Speedmart, like what you agree with what Aiman said, and it is on your watch list of all this while. All right, so first thing for me, I would definitely recommend you to look at the expiry date. All right, so if you actually have seen this 28 January 2026, then it's very close. All right, but the main red flag, right, for me is that I will look at the warrant price. All right, so if you look at the warrant bid price and ask price, the first thing you will have to see whether they have spread. Like this is actually an example of having spread 21 cents and 29 cents, but this is just off market price. So you have to actually look at the live price metrics to see spread, but this is an example. All right, and then the next thing is that you have to see how much does this warrant worth. Okay, so in this case, 9 cents for C23, 21 cents for both C15 and C5. So with this, if you would like to have a leverage effect on warrants, why we buy warrants, why do you invest in warrants, is that you want a leveraging effect, means that you want it to make more money for you. So indeed, with this, then you have to actually invest with a smaller capital. So a bid price, a warrant price of around 9 cents will be quite sweet, but 20 cents will be relatively higher. All right, so the next thing, you can actually look at the sensitivity. 3 ticks is fine. 2 ticks is very fast, but it's good as well. And then it's a very good combination of less ticks and higher effective gearing. All right, so with this, let me show you on how do we actually compare using the live price metrics for all these 99 speed mark warrants. Okay, so I think we are on the same screen. 99 speed mark, I have compared 3 of them using the live price matrix on RHB Warrant website. All right, so from this, it's easy to tell whether they have spread or not. So all these 3 99 speed mark warrants are trading in tight spreads, only 1 takeaway. And this is actually near to 30 cents already for 99 speed mark C5. Right, so this C15, C5, I would say it's quite deep in the money, so it will be more expensive. Then we can just highlight, we can just put our attention on 99 speed mark C23. All right, so identify what is your entry price. So yesterday close was around 313 and 314. So the entry price would be about 9 cents for bid price. All right, so if you are targeting a very bullish move, maybe your TP would be about 3 ringgit and 20 cents. Then you can actually set TP for 99 speed mark C23 at the value of 10 cents. All right, so this is how you actually use a live price matrix. All right, so this is a sharing on 99 speed mark C23. It was the highest traded 99 speed mark warrant yesterday in the market as well. All right, so besides from 99 speed mark, we also have listed many others new warrants. Okay, so it's already November, right? But then of course we still want to keep it up with the market. We have actually issued warrants. Those are new, so that the exercise price would be more relevant to the current market situation. As we are all in the market, we know that the share prices has been moving up and down every day very fast. Okay, especially some of the tech counters and also construction names as well. All right, so with this, we have also issued SCG Berhad, Southern Cable Group Berhad, CP. Okay, so with the new SCG Berhad warrants, we have this CP exercise price at 2 ringgit and 5 cents. Yesterday, I think it's already over 2 ringgit and 5 cents lah, so it's slightly in the money. You will see the warrant price slightly, relatively more expensive than higher than like 10 cents or maybe 8 cents or 9 cents because there's intrinsic value in it. So for in the money warrants, you will normally see quite sensitive. The movement will be quite sensitive, about 3 ticks, and the effective gearing is about 3.3 times. All right, so Me Technovation, if you are bullish on some of the tech names, including Me Technovation, Me C39. Okay, with the exercise price of 3 ringgit and 15 cents, is also giving the investors an effective gearing of 3.5 times. All right, so if you want to invest in Me, you don't want to like take out like 3 ringgit to buy the mother share, then you can actually fork out only about 12 and a half cents for you to invest in Me's core warrant, Me C39. All right, so I do a quick update on the rest of the names. Binastra CD, the 4th Binastra warrants. So our first warrant on Binastra CA, is relatively more expensive in absolute price due to the lower exercise price. So there's actually a lot of intrinsic value. But this one is very, very close to, it's quite at the money. It's slightly out of the money, but then it's very close to the exercise price. EG Industry, EGCJ. EG has been one of our choice of the small RHB small Joe. Okay, so small cap Joe, then EGCJ would be providing investors a 3.8 times of effective gearing with the bid price of only 6 cents. Our previous EGCG, right? The exercise price was a bit too low, and that's why it's a bit more expensive because EG share price actually went up quite a bit. Yeah, so EGCJ would be more, it will be slightly out of money, and then will be good for investors to trade medium term or short term as well because the effective gearing was quite decent at around 4 times. Okay, so front can C50, SolarVest CX, and also not to forget Netgate C4. Okay, Netgate has always been a popular counter, popular call warrants counter that retail investors would like to trade, right? So but this one I think it will be quite cheap lah, because it's about 3.5 cents. The main reason would be due to the exercise price was set at 1.60 cents. All right, so this will actually give you slightly better effective gearing, but then the sensitivity will not be as good as those that's closer to exercise price or maybe higher than exercise price, which is we call it in the money. All right, so the full list will be available on RHB Warrant website. If you just go to the warrant search, you can just sort according to the expiry date, then you will see what is the newest. And also we also have a designated page for all new warrants. So if you would like to trade something new, not so old, then you can definitely explore on RHB Warrant website. All right, so thank you so much, guys. That's all from. Okay, so this is what I mentioned just now. Use the price metrics, and thank you so much, guys, for dialing in. I would wish you happy trading, and we'll see you tomorrow, same time, RHB Morning Kappa at 8. Thank you very much.